Just in terms of the sort of key things that I look for, for in any of the the investments that I'm making, three broad things. I say growth, but I'm thinking really long-term growth, and I'm always trying to come out with an understanding or a feel for how big a company can be in sort of 5, 10, 15 years. How big is the opportunity, and how well positioned competitively is the company to sort of really execute on that opportunity. And then secondly, returns. So just really, there's a lot of businesses that grow a lot that don't generate great returns. So just thinking about the unit economics of the business, the competitive moat, the competitive advantage, and how that feeds into, ideally incremental returns on capital. And ideally, those two things come together. You've got a company that's generating high incremental returns on capital that they're investing in the growth opportunity. And the third factor is management. You can have the opportunity and the good business, but management really needs to execute. It's better than I feared initially. When things initially, all locked down, there was a great concern about how that would sort of impact the process. But we're all Zooming these days, and I was really impressed with the resilience and the pickup on the Chinese side, even among some of your sort of deep in the country A-share companies, sort of really reacted well and adapted well, which I think is something you can say about a lot of Chinese companies anyway in terms of the resilience and adaptation. But they adapted quite well. The government is a constant in China. We know that. It's always there. But I think you've got to watch things closely and look at the direction. And we're lucky to have pretty detailed plans about where they want to go. So I think we sort of know the general direction. To be honest, more important than the dividend policy is the ability to pay. So I'm focused on companies that can generate cash, and if they've got great investment opportunities ahead of them that can generate higher returns, go for it. That's generally my view. It's if companies, if they can reinvest in the business at high rates of return, I generally encourage that. But and that tends to be the case in China. But and it's a discussion we have with management in every meeting. It's like, okay, you're generating this cash, where's it going? And they need to talk about it. And if it's clear the opportunities aren't there, then we will push for more to come back to us as shareholders. I think, and I mean, it's in market corrections. We do see the national team come in at times, but I don't think it's a huge driver of liquidity in the markets. I think it's definitely there in weak parts of the market in weak times, but I think in general, post 2015, there's a movement away from that. I mean, there's definitely a focus on letting the markets operate, just by themselves. Less so. It's still there, but I mean, and that's part of that is wanting to get into MSCI for the A shares, wanting to show the progress that they're making on that front.